Hello and welcome back to Smart Finance Investor. Today, we're diving deep into the world of investment strategies tailored specifically for the stock market. Whether you are a seasoned investor or just starting out, understanding these strategies can make a significant impact on your financial journey. In this video, we'll explore the nuances of long-term versus short-term investing, systematic investment plan versus lump sum investments, value investing principles, and identifying growth stock opportunities in the market. Segment 1: Long-term versus short-term investing. Welcome to the first segment of our investment strategy exploration, where we tackle the timeless debate, long-term versus short-term investing, with a focus on the stock market. The decision between long-term and short-term investing carries substantial weight due to the unique market dynamics. Long-term investing involves holding on to your investments for an extended period, typically years or even decades. This strategy leverages the power of compounding, helping your investments grow over time. Compound interest is your ally in long-term investing, amplifying your returns through reinvestment of earnings. It's the steady, enduring approach that seeks to weather market fluctuations. Contrastingly, short-term investing involves capitalizing on shorter market movements, sometimes even within days or weeks. While it can yield quick gains, it requires intense market awareness and continuous monitoring. Where markets can exhibit pronounced volatility, short-term investing carries higher risks. It demands a keen understanding of market trends and timely decision-making. In summary, your choice between long-term and short-term investing depends on factors like your financial goals, risk tolerance, and investment horizon. Each approach has its merits and challenges, and some investors find success through a blend of both strategies. Remember, there's no definitive, right answer. A well-informed strategy aligned with your personal circumstances is key. Segment 2: Systematic investment plan versus lump sum, which is better? In this segment, we unravel the age-old dilemma: systematic investment plan versus lump sum investments. Systematic investment plan, a popular approach, involves consistent investment of a fixed amount at regular intervals. This method averages out market fluctuations, reducing the impact of volatility. Imagine investing a fixed sum every month. When the market dips, you buy more units with the same amount, and when it rises, you purchase fewer units. Systematic investment plan aims to leverage market volatility for your advantage. Lump sum investing, on the other hand, means putting a significant amount into investments at once. While it might lead to higher returns during bull markets, timing the market accurately is challenging. Attempting to time the market can be risky, even for experienced investors. Lump sum investing can be suitable for those who possess a deep understanding of market trends. Systematic investment plan provides a disciplined, gradual approach that's ideal for many. In contrast, lump sum investments can seize market opportunities but require precision. The choice hinges on your risk tolerance and investment goals. Both systematic investment plan and lump sum strategies have their merits. The right one for you depends on your financial situation and objectives. Segment 3: Value investing principles for stocks. Welcome to the third segment of our investment strategy series, where we uncover the principles of value investing, specifically tailored for stocks. Value investing is a timeless strategy that revolves around identifying undervalued stocks and holding them until their market value aligns with their intrinsic worth. Value investing can be particularly advantageous, given the market's dynamic nature. Here are the fundamental principles to consider. Fundamental analysis: delve into a company's financial statements, analyzing earnings, assets, liabilities, and growth prospects. Margin of safety: invest in stocks trading below their intrinsic value to minimize potential losses. Long-term perspective: value investing requires patience. The true value of a stock may take time to be recognized by the market. Remember, value investing demands thorough research and a disciplined approach. It's about investing in companies with strong fundamentals that are currently undervalued in the market. As you embark on your value investing journey, keep in mind that this strategy requires a keen eye for potential, an understanding of financial metrics, and the willingness to wait for the market to realize the stock's true worth. Segment 4: Growth Stocks in the Market, Identifying Opportunities. Welcome to the fourth segment of our investment strategy series, where we focus on growth stocks and how to spot opportunities in the dynamic market. Growth stocks are companies with the potential for substantial revenue and earnings growth, making them an enticing option for investors seeking higher returns. Identifying growth stocks involves looking for companies positioned in rapidly expanding industries. Sectors like technology, e-commerce, healthcare, and renewable energy have demonstrated remarkable growth potential. Key indicators of a growth stock include consistent revenue growth, high demand for their products or services, and a history of innovation. However, investing in growth stocks comes with higher risk due to valuation concerns and market volatility. Thorough research and a balanced portfolio are essential. Remember, while growth stocks offer promise of high returns, they require a vigilant eye on market trends and a willingness to tolerate fluctuations. As we wrap up this exploration of investment strategies tailored for the stock market, remember that there's no one-size-fits-all approach. Your investment decisions should align with your financial goals, risk tolerance, and market understanding. Whether you are leaning towards long-term investing, exploring the benefits of systematic investment plan, practicing value investing principles, or seeking growth opportunities, the stock market offers a plethora of options. Thank you for joining us today. If you found this information valuable, don't forget to hit that like button, share this video, and subscribe to our channel. Until next time, happy investing.